The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Ben Broulas. These are your headlines. SpaceX targets a valuation of nearly $1.8 trillion in its IPO, expected next week, marketing over 500 million shares at $135 each in the biggest offering of all time.
Global equities pull back from record highs, the US snapping a 5-day winning streak and oil drifting lower as flaring Iran tensions distract from a ceasefire agreement between Israel and Lebanon. Benjamin Netanyahu tells CNBC that Lebanon needs to be demilitarized to ensure peace.
I want to get a Lebanese-Israeli peace as I do. We have to disarm Hezbollah and we have to demilitarize Lebanon. And I think that's a goal that, it's not I think, I know that this is a goal that the president and I share. And that's what we have to do.
And Broadcom takes a bruising. Investors dump the stock after disappointing revenue guidance, losing more than $300 million and putting it on course for one of the largest single-day wipeouts. I think fair to say you're going to be hearing a lot about SpaceX over the next week. It has set a fixed price of $135 per share ahead of its IPO roadshow. The unconventional move would give the company a valuation of $1.77 trillion. SpaceX is selling 555.6 million shares, which would amount to a fundraise of $75 billion. The Elon Musk-led company is planning to debut on the NASDAQ on the 12th of June. JP Morgan CEO Jamie Dimon will pitch the blockbuster IPO to the bank's high net worth clients this week, according to multiple reports. Dimon will reportedly be joined by SpaceX President Gwynne Shotwell and CFO Brett Johnson for a session as the lender looks to drive retail participation in what would be Wall Street's biggest ever IPO. Anthropic's IPO plans are also gaining steam, with the AI startup picking Morgan Stanley and Goldman Sachs to lead its market debut, according to multiple reports. Bloomberg is also reporting that JP Morgan is involved in the deal. Anthropic confidentially filed its IPO prospectus on Monday, which comes after a recent funding round at a valuation of $965 billion.
Let's see how the markets are doing. And this is how Wall Street finished the day. All the three main benchmarks sharply lower, giving up some of the gains that we've seen. Of course, it's worth remembering that the markets have been touching several new record highs and closing highs in the last week or so. So you can see some profit taking here and a bit of a retreat there in equities. The NASDAQ actually, it's the S&P 500 that snapped what was a 9-day winning streak. Part of the picture here is that oil prices rose yesterday after the attacks, the escalation or the ceasefire being called into question in the Middle East, and the talks really in a bit of a stalemate situation, so oil prices rising there. Let's have a look at what's playing out in the Asian markets, and most of the benchmarks in the region falling in the Thursday session as they currently trade. It's the South Korean Kospi currently leading losses, just slightly more than the Hang Seng, down around 1.5%, both of those. The Nikkei 225 also off by 1.4%. Shanghai Composite a little bit more resilient there, but also down 0.2%. Let's have a look at what's being anticipated when European trading gets started for the Thursday session. And picking up on that risk-off sentiment in Asia, the benchmarks here in Europe also looking to give up territory. Let's see how things play out. As ever, we'll bring you the European market open when that happens in 56 minutes from now. And looking ahead to the US trading day stateside, again, a mixed picture there. We saw the sharp fall in Broadcom shares after it posted an update, and you can see sentiment of that seeming to weigh on the NASDAQ, potentially there contributing to the futures being called lower. The Dow, though, looking slightly more ebullient, looking to open in positive territory. Karen.
Ben, let's circle back to some of these IPOs with Matthias Heim, who's CIO at Bell Capital and also here to talk to us about the broader market. Matthias, I was struck by some of your commentary about all the listing activity and the perspective that you're bringing. Just walk us through how you're thinking about the flood of new IPOs coming to market.
Hey, good morning, Karen. Good to be with you. Yeah, so I do think there's two pieces of information with all these IPOs. One is apparently the market capitalization they will realize, and that often then is more tied to the valuation of the company apparently, but also a potential change of ownership, not necessarily to do with actually new equity issuance, which is, I do think, more important at this stage. And in SpaceX's case, that's around 75 billion. You mentioned that. And I do think that's the important number here, because that's the true capital formation. That's where new capital is raised. That's where economic value can be created or destroyed, depending on the cash flows and the potential dilution to existing shareholders. Whereas the pure IPO and the expiring of lockups and more free float is really truly a change of ownership, one shareholder selling out, diversifying its portfolio, and the entirety of investors adding a new stock to their portfolios.
Yeah, like trading Pokemon cards, not creating a whole new pack here. But when it comes to the process here, I wonder how we think about it and whether we digest whether there are going to be any market implications, because the big news flow has been the fixed price that Elon Musk went to market with, that we haven't had the typical book build process and some sort of range of numbers to work with. Do you think that has some sort of long tail effect on markets, whether other IPOs get priced that way, whether there could be a misstep here in terms of pricing? I mean, do you think any of that detail matters?
No, I don't think it matters for the broader market. There will be price discovery post-IPO for sure, but that's more company specific. And again, I don't think just a pure liquidity event that some shareholders are selling out and other shareholders are actually buying it, or other investors are buying it and becoming a shareholder. That's not an event which creates or destroys value, because value is driven by cash flows, and that's revenue and margins.
Matthias, when we see Broadcom shares fall so sharply after one earnings update, and it was only a fairly narrow miss, I think, on its results, does this serve as an alarm bell, a bit of a siren, when it comes to the concentration in equities that have been driving the markets to recent highs?
I mean, you're right with that point, in a sense that one company can change index dynamics to a certain degree, but I don't think it's necessarily a bad sign for the market, because what really, again, investors trying to do here is attaching the right price in a very intense capex cycle, where especially with these highly geared companies such as semiconductors, operating leverage is so extreme. So we see tremendous margin expansion, tremendous revenue growth, and I do think that's not easy to price. So when you're talking Broadcom dropping 12-13% pre-market, I'm just seeing that as a fundamentally correct dynamic. And I don't think you necessarily see spillovers into other areas of the market.
And then, sorry, I know I'm jumping around topics here, but there's so much going on in the news today. I just want to get your thoughts on as much of it as we can. And this story around Partners Group, the Swiss private equity firm that has limited the amount investors can withdraw from its flagship fund at 5% of its value, that's for Q2 in the year. Do you think that serves as any sort of concern about what we saw in private capital now spilling over, concerns spilling over into private equity as well? Or do you think this is more of a contained situation?
I don't think it's a private market situation, whether it's equity or credit. I think it concerns assets which are not frequently traded. So necessarily, again, price discovery happens when you buy or sell an asset. And if you own a private credit or private equity vehicle, you don't really transact in these names. So valuation becomes more of a theoretical sort of exercise, if you will. And what we've experienced, and I talked about that in the past, I mean, the last 3 to 4 years, we saw a big derating, very broad-based, based on a shift in the interest rate environment. I still doubt that has ever fully been priced into all of the private market assets. And so necessarily now, when you see redemptions, you will be forced to sell some of these assets, maybe in a rush, and then even get a worse price. And I do think that will destroy some of your initial sort of IRR return claims.
Yeah, interesting, Matthias. As we talk about just how healthy these markets are, we started out talking about the flood of IPOs coming to market, and he says not an equity raise. But the reality is we have had a big equity raise, and that is from Google, the $85 billion record raising. Has that raised any alarm bells for you about suggesting that, look, we've got these companies that typically huge free cash flow, typically hasn't needed to come to market for massive raisings? Does this signal a big change that you would be concerned about if it continues?
Well, it signals a few things. First is, they're still free cash flow wise, probably positive, meaning they can stem most of their capex plans by operating cash flows. But in the end, it's about managing the capital structure. And also, the market is quite friendly if you think, we're in a boom time when it comes to the whole AI build out. And so naturally, this is rather an attractive phase to raise capital for a company such as Alphabet. I don't think that's necessarily a bad sign, and how it got absorbed with the price action we saw on Alphabet stock, I still think that's a more encouraging sign than it should be distracting. It should be concerning once it becomes very lopsided in a sense that it's very attractive only for the corporates raising money and investors are getting sort of squeezed, that any forward return becomes very unattractive. I don't think we're there yet. I think the valuation backdrop is still okay in most areas of the market. And so I do think that's still an okay picture, but we're still clearly in a quite enthusiastic phase of the market.
Yes, some might even say euphoric, Matthias. And let me ask you before we let you go, what would you be tactically buying at this point?
We still like the electrification plays. They have strong tailwinds, beginning this year from the data center build-outs, but I think there's a broader story attached to them. Energy transition will be a big topic in Europe, so maybe postpone a bit this year due to the rate and whole oil story, but I do think going into next year that remains a very strong story. I also think it's worthwhile once in a while to diversify away if you have large gains, and I do think most investors in the market have the largest gains with AI capex beneficiaries. So I still think the biggest risk is not coming from inflation, oil or interest rates, but that at some point this capex cycle is about to slow down. So you want to sort of steadily diversify these profits into areas of the market where you're less affected by this capex cycle. And there are, financials in the US, we talked about that in the past, are an opportunity in that sense.
Yes, indeed. Financials over the week have been down about 2%. It seems like they've been backing off some of their levels in recent times. Thank you so much, Matthias. Matthias Heim with us, CEO of Bell Capital.
Thank you.
Israel and Lebanon have agreed to implement a US-mediated ceasefire following 2 days of talks in Washington, lifting hopes of a deal between the US and Iran. Speaking to CNBC, Israeli Prime Minister Benjamin Netanyahu said the demilitarization of Lebanon is needed to reach peace between the countries.
If we want to save Lebanon, if we want to get a Lebanese-Israeli peace, as I do, we have to disarm Hezbollah, and we have to demilitarize Lebanon. And I think that's a goal that, it's not I think, I know that this is a goal that the President and I share. And that's what we have to do. So we're trying to, how shall I say this, degrade Hezbollah so that a free and independent Lebanon can emerge. We're still working on it, but we're en route.
Following the talks in Washington, Lebanon's ambassador to the US weighed in on the ceasefire agreement.
Under the leadership of President Joseph Aoun and the guidance of Prime Minister Nawaf Salam, I lead the Lebanese delegation headed by Ambassador Karam in this round of direct negotiations with a comprehensive agreement to a ceasefire across all Lebanese territories. This agreement represents the embodiment of the independent and sovereign Lebanese state's decision.
Let's get out to Dan for more. Dan, unfortunately, we've watched a lot of war strategies in recent years and felt as though Israel was escalating before this ceasefire, and perhaps that was a tactic. But how do we view whether this ceasefire will hold and the ramifications for getting a deal done with Tehran?
Well, that's the big question in the region this morning. And while we have seen some positive news coming through with Israel and Lebanon agreeing to that truce, whether or not it's going to hold and for how long this could last, of course, remains to be seen at this point. Also wanted to start by showing you some fresh footage that we had coming into the newsroom of the Iranian drone attack on Kuwait's international airport. And if you haven't seen this already, it is quite extraordinary vision. This is the projectile that hit Terminal 1, its main international hub. That attack tragically killing one person. It injured dozens more. And of course, as you can see here, just take a look at that, badly damaging this critical piece of civilian infrastructure. The timing here really terrible as well, because Terminal 1 had only reopened on Monday after a separate Iranian strike in February. And for Kuwait, this is really big. Oil accounts for about 50% of nominal GDP, 90% of export earnings, 90% of government revenue. So any impact on aviation is really crippling to its own economic diversification efforts. Despite that, though, of course, even against that backdrop, we have seen signs of movement on the diplomatic track. As I mentioned, Israel and Lebanon agreeing to this full ceasefire. It's contingent on Hezbollah also halting its attacks and pulling back south of the Litani River. This is important as well because a full ceasefire here is one of the key demands that Iran put on the table in its own negotiations with the Trump administration to try and end the war. And it comes after this reported intervention from the White House as well. On Monday, President Trump putting the brakes, you could say, on what was a reported Israeli plan to launch strikes on Beirut, reportedly lashing out at Prime Minister Netanyahu in what was a pretty heated phone call, first reported by Axios. Netanyahu speaking to CNBC's Sarah Eisen in Jerusalem overnight. He also played down that reported rift, saying that while he and Trump may have tactical disagreements over the war, they agreed on many things. And of course, he also called Iran an existential threat to both Israel and the United States and insisted that Tehran must be prevented from developing a nuclear weapon. Interestingly, the Wall Street Journal also has a splash this morning saying the president told aides privately that he would consider ending the ceasefire with Iran, but only if, and this is important, only if Tehran kills American troops. So short of that, the White House insists the ceasefire remains intact. That appears to be the president's new red line. The president also still optimistic that he can get an Iran deal soon. And perhaps the Israel-Lebanon ceasefire is another step in attempting to unlock that. Of course, the gap between the US and Iran still remains quite wide at this point, but the president has suggested that an agreement is coming soon. It's back over to you.
Dan, thank you very much for filling in the blanks for us and bringing it all together for us. Meantime, 4 Republicans joined Democrats to vote for a resolution that would block US President Donald Trump from continuing the war in Iran without congressional approval. The vote is largely symbolic and would require Senate approval to take effect.
Coming up on the show, US private hiring accelerates in May, topping expectations. We'll break down the numbers for you. Plus, Rémy Cointreau slashes its dividend as full-year profits fall. Charlotte will break down the numbers. And we'll discuss the role of AI in the healthcare sector with the CEO of Philips. That conversation is coming up after the break. Stay with us.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Philips has announced a partnership with WellSpan Health to expand innovation and research across several US states. The company said the agreement positions it as a leader in the application of AI in healthcare. Roy Jacobs joins us now, the CEO of Philips. Roy, thank you so much for joining us and bringing the announcement to us. Just explain what this means in terms of the future for Philips.
Yeah, I think what's so exciting about this new technology partnership is that we actually bringing innovation to the community centers. Traditionally, we as a healthcare technology provider have been doing a lot of innovation and research together with the academic centers. But actually, if you want to reach even more people and patients, and actually, especially if you want to use the full power of AI to serve those better, you need also to go into the community hospitals. And WellSpan is a very reputable leader in North America in serving the community centers. They do it in hospitals, they do it outside in ambulatory centers. And actually, they have also a very specific goal of saving 500,000 man-hours with the help of AI to spend more time on the patient. And that's fully aligned with our mission in delivering better care to more people.
Roy, I was looking a little at some of the work you've been doing with WellSpan. It seems as though it streamlines a lot of the processes to ensure patients, even if there's a surge in terms of activity in the hospital, it allows some of the patients to be seen quicker. Just explain how AI is bringing productivity into healthcare and improving those outcomes for patients.
Yeah, I think what is great about this partnership that we're becoming very tangible. So when you monitor the patient, how can you actually predict faster if they're deteriorating? If you're making an imaging scan for more precise diagnosis, how can you shorter the diagnosis time? How can you shorten also the time that a patient has to go through the examination? And then if you need to do an intervention with minimally invasive therapy, how can you make sure that you get to the stroke the fastest so that actually you can really minimize the impact on the patient? And we're really doing it with applying the latest of AI and doing it with an ecosystem approach. WellSpan has been very clear they need to double down on a few big tech partners that actually together transform healthcare. So for example, they also work with AWS, which is a strong partner of ours as well. So we are providing clinical expertise and the right solution sets. AWS provides cloud solutions. And then of course, WellSpan has the whole delivery care system, including the nurses, doctors, and the patient in particular to take care of.
Roy, last time we spoke, you mentioned the development by Philips of MRI scanning technology that does not require helium. Where are we? Several weeks on, Strait of Hormuz still effectively closed to most shipping traffic. Helium, one of those commodities affected. Where are you in terms of rolling that out more widely? Where are we up to with the deployment of those scanners and that technology?
Yeah, it's a critical technology that we need at this time, and actually we need it for the future. Because indeed, the medical imaging industry uses 30% of all global helium. And helium, as we know now, is even more short of being in supply. So actually that means that our helium-free proposition is really gaining traction. It's already the fastest and the fastest growing installed base of helium-free MRI image solutions out there. We are launching next year the 3T as well, so we can even expand a bigger portfolio. But we're really seeing that this solution is coming at the right time. Actually has already an installed base that benefits from the fact that they don't need to refill the helium. And then actually we are growing it as we speak. So this is a very critical solution because we need to keep giving the diagnosed opportunities to all these hospitals around the world. And we need to do that with the least use of helium. And that's exactly what the helium-free MRI from Philips can do.
Of course, developing such technology requires investment and expenditure on your part. And yet at the same time, if you were trying to sell those products into the US, there's now the potential of tariffs, fresh tariffs announced just in the last 24 hours by the US Trade Representative's office. What do you make of that, and how does that affect your business strategy in the coming year?
Yeah, I think we have already seen since longer, actually since COVID, that people and especially countries are looking how they can become more self-sufficient in providing critical technologies to their patients in this case. So what we have been doing, actually, we have been strengthening our ecosystem, in this case, in North America. So actually, in Pennsylvania, the state that we're also having the agreement with WellSpan with, we have also been announcing a $150 million investment in Reidsville to expand our production capacity. We already have a very strong footprint in North America. We are further strengthening that to actually serve that market better. And as it's the biggest healthcare market, the fastest growing healthcare market, it also is a good investment with a good return. So in that sense, we are navigating the tariffs through diversifying our supply chain. We have been doing that in the last 3 years. That's also why we have been able to mitigate tariffs to a big extent. Of course, we also do it with own productivity. So on one hand, we make sure that we can serve customers better, being closer to where they are, whilst at the same time, we take our own measures to absorb additional costs that we have to also deal with as a result of tariffs. And that's something that so far we have been doing well. And actually, we continue to really go in a forward move on this, because this is how the world will look like, in our view, in the coming foreseeable future. More regionalized supply chains that you need to cater for in order also to have faster patient care that can be delivered.
Roy, while we're talking about costs, can I just swivel back to AI? Because your company and you have very strong street credentials based on all the incredible technology you brought to markets. And the reality is we're going through one of these incredible cycles for technology. As you deploy more and more AI, and even with this announcement today around this company in the United States, WellSpan, is the cost of AI becoming more and more expensive because of other companies crowding in, using the technology, the cost of compute? I mean, are you witnessing any of that?
So I think AI, of course, is an investment, but we have been investing in AI for much longer than today or even these kind of recent years. We have been on an R&D technology streak where we have been from 1.7 billion of investment that we are investing every year, doing half of that already in software for many, many years. And bigger part of that software investment now is going into full AI and data science. So we have been ramping up our investment, and that also needs to give the return. You have seen our growth expanding, you have seen our profit expanding. That is what we expect. Of course, what we see now as well, and that's something we need to take into account, is that some of the energy costs are going up. We need to be able to absorb that with additional productivity. But the investment case of AI is one that actually delivers better innovations, that should deliver better returns and better margins. And especially in healthcare, and that's why this WellSpan kind of announcement is so exciting, we believe that this is one of the best use cases for AI. Healthcare just doesn't have enough people to take care of all the patients. There is really a need to deliver even better care, better diagnosis, better interventions, better outcome for patients. So this is the domain that actually is really ripe for the benefits of AI. And let's not forget, 1/3 of all global data is in the healthcare domain. And of course, AI benefits from huge data sources it can apply its great technology on. And if you then have the clinical knowledge that we have and the healthcare delivery knowledge that, for example, WellSpan has, bringing that together creates real meaningful impact in day-to-day workflows, patient care delivery, but also efficiency for WellSpan as a system, the 500,000 hours they are going after with AI, and for us also how we actually can deliver better care for more people and then also grow Philips faster.
Roy, I've seen the company and the performance of the stock for many years, and I remember being at a conference in London where there was an argument that Philips had been overlooked by a lot of hedge funds, a lot of investors because of this incredible technology. But it feels as though, again, we're in this other cycle where investors are looking in another direction. They're looking at very spicy AI stocks, everything related to the data center, not looking at the applications still, and how companies that have been long-standing companies leaning into tech can adopt some of these innovations and actually run fast. Do you think there's a time coming when Philips gets another re-rating because of all the AI you're adopting?
Yeah, we are very confident that actually on one hand, we see a market that we serve that has a very solid and strong demand. The healthcare demand is growing. We see it also this year, actually at a good rate, and we are growing with that market. We also see actually that we can continue to expand margins, which means that as a company, we continue to create value. Yes, at this point in time, of course, there is a huge spike into some of the tech that is calling and taking quite some investment out of the market. We believe that actually when markets move on, they will see the opportunity in medtech coming back, the medtech market at large. It is a very reliable, long-term future market. That's a good investment. And that's also why we are confident that with the strategies that we have laid out at the Capital Markets Day, where we said we are going to grow mid-single digit, we are going to go to mid-teens margin, and we are actually going to consistently improve our performance trajectory, that will also deliver growth for not only us, but also the investors that will be with us.
It's so fascinating. Every time you ask someone, how is AI going to change the world? They always volunteer healthcare as the first sector. But if you look at how the sector has been performing lately, it has obviously been one of the casualties around the AI hype. But Roy, thank you for spelling out the case for us. We do appreciate your time this morning. Roy Jakobs with us, the CEO of Philips. We are counting down to the start of the European trading session. The early signals are weaker. We are seeing a little bit of risk-off moves in the last couple of sessions. Here in Europe yesterday, we were down roughly 0.6 plus as investors were digesting the events in the Middle East. And also stateside yesterday, a bit of a setback after the record run. Dow down 1.2% and 0.75% too off the S&P 500, having some bearing on sentiment at the open today.